Welcome to yet another engrossing film about the future of Tesla, a firm that has transformed the automobile sector and is also spearheading the renewable energy movement. In this video, it is discussed how full self-driving (FSD), a software that can be downloaded into an automobile and is expected to yield a 60% profit margin by 2030, might become a subscription service for Tesla, giving it the ability to control the market. Furthermore, Tesla's energy business is expected to generate over $100 billion in revenue in 2024 alone. The video gives you an understanding of Tesla's financial outlook and how knowing this can help you take advantage of early retirement. Come along as we explore the fascinating world of Tesla and its prospects for growth in the upcoming years. I'd like to see you hit the like button and subscribe before we begin. For Tesla, a subscription-based FSD service makes sense. Tesla estimates that the profit margin will reach 60% by 2030, albeit acknowledging that they do not yet have enough evidence to confirm this prediction. Since FSD is software that can be installed on an automobile, this is all about profit. By 2030, I think FSD will be regulated and Tesla's profit margin might even be larger. Furthermore, there is also Tesla Energy, which generated nearly $4 billion in revenue in 2024 and nearly $300 million in profit in the last quarter, translating into a 12% margin. They estimate that they will make $7.5 billion, with a 12% margin in 2023, $11.5 billion, with a 13% margin in 2024, and that amount will grow by 50% annually until 2030. In 2023, I believe there will be above $100 billion in overall revenue. But Tesla will have to pay foreign exchange costs, which will cut into its earnings. According to their predictions, Tesla will pay over $1.5 billion, which will lower their net income from over $17 billion to somewhat less than $16 billion. Although they are hopeful that lower interest rates will weaken the US dollar and lower costs, I believe that this expense will keep rising annually. Therefore, in my opinion, Tesla's stock will continue to decline by 2% a year between 2023 and 2030. There will be neither dividends nor buybacks. By the end of the decade, they project that Tesla will have made over $750 billion in revenue from FSD, energy, and cars combined. This is a cautious estimate, given the other projects Tesla has in the works, such as the Tesla Bot. Going on to fully autonomous driving, I estimate that by 2030, the one-time cost will be nearly $30,000. Even though some people would find this forecast absurd, full self-driving technology cost $8,000 in 2020. By 2022's end, the cost had nearly doubled to $15,000. As a precaution, I have based my projection on the average price for 2022, which is $12,500. In the following 7 years, I think the price will double again, maybe even more. The FSD profit margin will increase to 60% by 2030, at which point there will be just profit. This is due to the fact that FSD is software that can be installed on an automobile to provide self-driving capabilities. The car will be regulated and able to transport you places by 2030. I think Tesla can overcome this FSD problem, and by 2030, I think they'll have a $38 billion profit margin at most. Apart from FSD, the energy sector in Tesla is doing very well. They generated about $4 billion in revenue overall in 2022, with a 12% margin from profits in the final quarter of the year. With a 12% margin, I project that they will generate $7.5 billion in revenue overall in 2023, leaving $900 million for the entire year. With a 13% margin, I project $11.5 billion in total revenue in 2024, or around $1.5 billion. From that point on, revenue will rise by 50% annually until 2030, at which point the profit margin will likewise rise annually. Since Tesla has said that they aim to match the energy sector's revenue, which is currently at 20% with their vehicles, I'm also being conservative with my prediction. Nevertheless, it might be much higher. It would be a tremendous achievement if Tesla could reach $100 billion in total revenue by 2023, as I expect. It appears like Tesla has a promising 10 years ahead of it, just their energy and automotive sectors bring in over $750 billion in sales, and it doesn't even account for the impending Tesla bot and other initiatives. Naturally, nevertheless, we must exercise caution when it comes to earnings. According to my estimates, Tesla will have earned over $17 billion this year and over $170 billion in profits by the end of 2030. We must, however, take into consideration the foreign exchange expense, which will reduce our total revenue. For instance, our income will drop from over $17 billion to slightly under $16 billion in 2023 due to about $1.5 billion in FX currency expenditures alone. But when everything is said and done, the influence is not that great. Let's now discuss shares. There will be a 2% dilution every year with no dividends or buybacks between 2023 and 2030. In terms of EPS, it was $4.70 in 2022. By the end of this year, I predict that we will have $4.86 EPS, and by 2030, we will almost have $47 EPS. That really is amazing. Let's now discuss the pricing of the stock. Tesla had a difficult year in 2022, with the stock falling by roughly 70 to 80%. With the 50 PE, the average price of Tesla stock was about $204 per share. At one time, it dropped to $102 per share, but since the fiscal year was still open, it might drop even further. However, if you had invested $10,000 at $204 a share in Tesla stock, you would have acquired roughly 49 shares, and given the stock's current fluctuating price between $180 and $170, you could have ended the year with a respectable profit. I predict that the stock market will turn bullish in the first quarter of 2024, when inflation will start to decline and the Federal Reserve will take a break. With a price per share of $292 and a price-to-earnings ratio of 60, Tesla's market capitalization would nearly approach $1 trillion. In such a scenario, your $10,000 initial investment would increase to over $14,000, representing a 40% return. There is a substantial 20% return potential even if the stock remains in the 50 PE range. However, I think that by 2024, Tesla's stock price might reach a very high PE of 65, with a market capitalization of more than $1.5 trillion and a share price of $478. In the event that this occurs, you would have received a return on investment of about 230%, or more than $23,500. I forecast a market valuation of about $2.2 trillion, a PE of 60, and a stock price of $650 per share in 2025. Your $10,000 investment would now be worth about $32,000, which is a significant amount. If we enter a very optimistic phase by 2026, Tesla might divide its shares 4-to-1. With a market capitalization of more than $2.8 trillion, I anticipate a PE of 55 and a stock price of $828 per share. Over $52,000 would be the current value of your first investment, more than 5 times what you started with. With a market capitalization of $3.7 trillion, a PE of 50, and a stock price of $1,061 per share in 2027 are what I anticipate. Over $73,000 would be the current value of your investment, more than 7 times what you started with. I project a market size of more than $6 trillion and a stock price of $1,632 per share in 2030, based on a PE of 35. By 2030, your $10,000 initial investment would have grown to roughly $80,000, or about 800%. I'm investing all of my money in Tesla stock because of its amazing growth potential, even though I realize this may seem crazy. This means that even if my predictions are only partially accurate, you might still get an incredible 40% return. Anyhow, those are just a few of the figures I've been examining. It will be interesting to watch how events develop in the ensuing years. That brings an end to our analysis of Tesla's future prospects, especially in light of their booming energy business and their subscription-based service for fully autonomous driving technology. It's evident that Tesla has a great deal of potential for development and profitability in the upcoming years, even though some of the projections may appear lofty. Of course, there are costs to consider, such as foreign exchange, but all in all, things seem promising. We appreciate your time and hope to see you in our upcoming video.